Imagine a world where a single dollar could buy you a steak dinner, fill your gas tank, and leave you with enough for a movie ticket. That wasn't a fantasy of the distant past, but the reality for Americans before 1971. So what changed? The answer lies in the fascinating history of the US dollar, and it might just hold the key to protecting your hard-earned cash from future economic bumps. We will get into the world of gold and silver, exploring how these shiny metals can be a shield against rising prices and a tool to build your wealth over time. But before we jump in, let's take a quick trip back in time to understand the foundation of our current financial system, the gold standard. For most of American history, a dollar wasn't just a green piece of paper, it was backed by something real, gold. This system, called the gold standard, meant that a certain amount of gold was directly tied to the value of a dollar. Think of each dollar bill as a little receipt for a tiny stash of gold stored away in a giant vault. This created stability. The value of your dollar wouldn't jump around wildly because it was anchored to a precious metal with a limited supply. The gold standard wasn't perfect though. It limited how much money the government could print, making it harder to boost the economy during tough times. Plus, as economies grew, everyone wanted more gold, putting pressure on the system. The final straw came in the 1960s. The US printed more dollars than they had gold to back them, which shook people's confidence. In 1971, President Nixon officially ended the gold standard. Now, the US dollar became a
Fiat currency,
meaning its value is based solely on the government's promise and people's trust. Since then, the value of the dollar has been on a roller coaster ride, influenced by things like inflation, rising prices, interest rates, and what's happening in economies around the world. While this flexibility can be helpful for governments, it also means there's more uncertainty for everyday people. The buying power of your dollar can shrink over time, which means your savings lose value. This is where gold and silver step in. These precious metals have a long history of holding their value, even when the economy takes a tumble. They're seen as a safe haven for investors because there's only so much of them around, while demand for them stays strong worldwide. Unlike the US dollar, which can be printed at will, the supply of gold and silver is relatively fixed, making them a good way to hedge against inflation. Now, this video isn't here to tell you what to do with your money, but it's important to understand both the good and not so good sides of investing in gold and silver. So let's have a quick breakdown. Firstly, let's see why gold and silver can be such smart additions to your financial toolbox. First up, they act like a natural shield against inflation, that sneaky thief that slowly eats away at the buying power of your hard-earned cash. Suppose you sock away some money for a future vacation. 10 years down the line, you might find that due to inflation, your dream trip to Hawaii that seemed affordable back then now costs a whole lot more. But gold and silver have a history of rising in value alongside inflation. So if you'd invested in some gold or silver alongside your vacation fund, it could help cover the difference in price caused by inflation, keeping your dream trip within reach. Next up, there's a sense of security that comes with owning physical gold and silver. Unlike stocks and bonds, which are basically certificates of ownership for a piece of a company or loan, when you invest in gold or silver, you actually own the real stuff. You could be holding a shiny gold bar in your hand or have a stack of silver coins tucked away safely. In a world where financial markets can be unpredictable, having some tangible assets you can hold on to can provide a sense of peace of mind. Gold and silver have been around for centuries, literally. Think about all the empires and economic ups and downs they've witnessed. Despite all that history, they've consistently shown an ability to hold their value over the long term. This makes them a great choice for someone looking to build a nest egg for retirement or a major life goal. Imagine your younger self putting away some money in gold or silver. Years later, when it's time to retire or buy your dream house, you could tap into that investment and have a valuable asset to help you reach your goals. Now, before you rush out and buy all the gold bars you can find, it's important to understand the downsides of investing in precious metals. The first thing to consider is that unlike a steady paycheck, gold and silver prices can be a bit like a roller coaster, up and down, sometimes dramatically in the short term. Imagine you buy some gold today thinking it'll be a great way to grow your savings, but a few months later, the price dips and suddenly your gold isn't worth what you paid for it. Bummer, right? While history suggests gold and silver tend to rise in value over the long haul, there's no guarantee they'll go up in the next few months or even years. Another thing to keep in mind is that unlike keeping your money in a safe deposit box at the bank, which is usually free, storing your gold and silver securely can cost extra. If you buy physical gold bars or silver coins, you might need to rent a safe deposit box at a bank or invest in a secure home safe. These fees can eat into your potential profits, so factor them in before you buy. Finally, unlike some stocks that pay dividends, like a little bonus check from the company you invest in, gold and silver generally don't offer any ongoing income. They're more like long-term investments where you're hoping the value will increase over time so you can sell them for a profit. So if you're looking for an investment that brings in a steady stream of cash, precious metals might not be the best option. So are gold and silver right for you? It really depends on your overall financial goals and risk tolerance. If you're nervous about the stock market's ups and downs and are looking for a long-term investment to diversify your portfolio, then a small percentage of gold and silver might be a good fit. However, if you need your money to be readily accessible or are looking for something that generates income, you might want to consider other options. Your priority should be to build a well-rounded financial plan that considers your needs and goals. Take it as building a house. You wouldn't just use one type of material for the entire structure. You'd use different materials for the foundation, walls, and roof to create a strong and stable building. The same goes for your finances. By having a mix of investments, you can create a financial plan that can weather different economic storms. So gold and silver can be a valuable addition to a well-rounded investment portfolio, but they shouldn't be the only thing you have in there. Consider your goals, how much risk you're comfortable with, and your time horizon before making any decisions. Also, the story of the US dollar teaches us a valuable lesson. Economic systems can change, and the value of money can fluctuate. By educating yourself about financial concepts and exploring investment options like gold and silver, you can take control of your financial future and weather any economic storm that may come your way. So don't forget to watch our video, Evolution of the US Dollar, its journey from inception to now, if you're interested in learning about the history of the US dollar as a whole. Also, remember, we've got more videos coming up that dive into important money stuff, like saving, handling debt, and making savvy buys that don't usually get talked about. So stay tuned to build your financial knowledge and achieve your financial goals.